Hi, weekly stock market update, everybody, and let's just get right into it. Remember, this is not individual advice. Markets can fall as well as fall even more. Okay, so please take care of those risk warnings, and there is always a risk to your capital in investing. Please be aware of that. Valuations, you're paying $27 for every forecasted dollar of profit of Microsoft. The green ones are cheaper, but valuation is not the only thing that moves stock prices, which is why the ones in red have been some of the best performers, because growth, for instance, matters. Where are we in terms of the sectors and the stocks and how they're doing? Well, the outliers are few and far between, as is always the case in the markets. In a bull market, you'll get more crowded space here. In a bear market, you'll get more crowded space here. But even in a bull market, you will get a bunch of stocks producing negative returns. It's just the way that life works out. Okay, I don't tend to pick individual sectors, but if somebody put a gun to my head and said which sectors are doing particularly well, I'd say utilities. Real estate's improving as well because of the interest rate outlook. But I don't, as I said, gamble on sectors because I don't gamble at all. Now, the biggest thing of news coming up, Wednesday, August 28th, after market close, Nvidia have got their results, okay? Next Wednesday, after market close, that's when you're all going to be holding on to your ankles, because if their results are not blockbuster, there's going to be a problem. More stocks to come. Don't forget to like, comment, share, subscribe. It makes a big difference. Now, as you know, the way in which, not just for my pension, but I tell other people for their pensions to do investing is to tick the value box for companies, make sure they're undervalued relative to their profitability, because undervalued companies tend to do better than overvalued ones. Make sure they've got growth, revenue, and, which is another word for sales, and earnings, which is another word for profits. And they're producing some income. Value is more important than growth, which is more important than income. We know this from various academic literature. Have a look at alpeshpatel.com/links if you want some of that literature. Cash return on capital invested, I need them to be green. Why? Because then they're in the top quartile, top 25% of all companies. They tend to generate 30% per annum over the long term, not guaranteed to produce 30% per annum, but as a basket of stocks, they tend to. Momentum is incredibly important. So is Sortino and Alpha. You can Google those. They're statistical measures of how companies have done in the past, but the past is not a guarantee of the future. Okay, so how's the past week been? This is how the past week's been. Tons of green, and that's our job, is to be relaxed, because the week before that, or 2 weeks before that, it was tons of red, and people were panicking and throwing up and jumping out of windows. Which is why, like Warren Buffett, when it comes to my investments, I tend to take my time before making decisions, because whether it's to get in or to get out, because look what usually comes around the corner. Past year, lots of green. My job is to make sure investors are in a position to take advantage of these kinds of opportunities when they arise. I can't make these opportunities. I don't make these companies. My job is not to try and stock pick, but is to put ourselves in a position that we're focused on the areas where, if we throw the dart, if you want to put it that way, it's likely to land in green and we make some money. Okay, with limited downside volatility. Exchange traded funds, you can look at those yourself. Just be careful, those of you who think that your wealth managers put you on fixed income, because just as it can go up 20%, it can drop 20% in a month as well. So be careful with some of those fixed income funds. People have managed to get their fingers burnt. Now, year to date, since January, the S&P and the Nasdaq are up 17%. What does that involve? Well, it involved very long periods of 0% return. Everything from February till August was a 0% return. Wait a minute, February to August, that's most of the year. And you're talking about 17%? Yeah, because most of the time, the market will either fall, it will eat away your gains and take you back to nothing, all right, or give you 0%. 3 times out of 4, it'll do that. 3 days out of 4, 3 months out of 4, it'll do that. Limited periods, it goes up. All right? Now, this is what people don't understand, which is why they keep trying to trade their investments. They get in, they get out here, they get in here, they get out here, and then they might get in again here before it's time to get back out. So just be very careful understanding how prices actually move. What about the various sectors? How have they done? Actually, every single sector is up for the year. So were I to gamble on sectors, I could have picked any of those sectors and would have been fine. But I don't gamble on sectors. I look at individual companies to make sure they're doing well. You can see communications and utilities and financials are the three best performers. Nobody said technology. No. What about factors? Well, momentum, value, growth. Well, that's what I look at. So my job is to say, regardless of sector, I need value, growth, momentum, income, all ticked, because if they are, then I'm more likely to get a positive return. Not guaranteed to, sadly, but more likely to. Over the past year, you're up 35% on your pension. Okay, if you even just track the NASDAQ and if you track the S&P, your pension is up 28%. So why isn't it? Well, usually because you didn't do what you're supposed to, which is you didn't just hold. You thought that those 0% returns meant you should get out. You thought that as you had some gains and then it went into negative territory, that everything should be binned. You felt that as the market was falling, you should exit. Those are the three mistakes you made. Whereas the patient, as Warren Buffett says, the stock market is a mechanism for moving money from the impatient to the patient. The patient, no, your gains will whittle into negative territory. You will have long periods of 0% returns, massively long periods of 0% returns, and some negative returns. Yet, that's what 34% looks like. So the advantage is you don't actually have to keep jumping up and down. FTSE 350, that's what it looks like over the past month. The biggest movers up. What about the S&P? Well, we're pretty much at all-time highs. Yes, I said that. And when people panicked here and were sort of saying, oh no, what do we do? What do we do? Well, that kind of fall is going to happen again. That's what's called a baby bear because the monthly MACD is rising. That's also a baby bear. That's a mama bear. And for every two baby bears, maybe there's one mama bear, roughly. And every 5 years, there's one daddy bear. Okay, so what are we at the moment? Well, there you go. You are pretty much where you were here. So you're roughly here, and you can expect another baby bear. Maybe a baby turns into a mama, turns into a daddy. We don't know when. But at the moment, I wouldn't buy more S&P 500. I continue holding what I've got. And I'm tentatively toe dipping only into exceptional companies if I find them. NASDAQ 100, I continue holding. Again, a baby bear because the monthly MACD is rising. So those falls, which panicked everybody and had them throwing themselves off tall buildings, actually could be ignored because that's what you do in baby bears. You ignore them, baby. But how did you know it was not going to become a mama? Well, this is what happens when people are premature evacuators of the stock market. They jump on a baby bear, don't wait for a mama which doesn't transpire, and then they've left, and the best 3 days of the market, the best week of the market for I think about 4 years, they miss. And you know what they say, if you miss a few of the best days, you're screwed. Not only that, the best days tend to come after the biggest falls. So people like me who just sit there, do nothing, tend to do better. Well, it's not just me. I just copied that off Warren Buffett. You just sit there and do nothing most of the time. Because we're waiting for this, and that didn't happen. Still hasn't happened. Would I buy now the NASDAQ? No. Because it's overbought. In other words, it's in the top quarter of this graph. So not for me at the moment. FTSE 100, you can see what it's doing. It's going sideways. Top 10 S&P 500 stocks. So let's have a look at these. As you know, I bought Universal Health start of this month. So what's that? 3 weeks ago. It's the only one I bought from my approved August list. Okay, and you might say, you fool, why didn't you buy any of the others? Well, Molina's up 20%. Centene's up 17, interesting. Fortinet's up 30. Okay, let's have a look at these and see how they're doing. So Calanova jumped up. Would I go into it? Well, it's an 8. The momentum's in the right direction. I'm scared to get into that. It's too volatile. Fortinet's a 7, so it means my value growth income. I really want that to cross above its moving average before I consider this a safe purchase. Universal Health, as I said, I bought into at the start of the month. It's a 9. So why did you get into Universal? Sorry, not Universal Health. United Health. It's a different company. Why would you look at Universal Health at the moment? No, because it's a 9. Yes, but overbought, so no. United Health. So tech back on Universal Health, it was United Health. 3M, I wanted to. 3M, right direction, but it's not 7, 8, or 9. Hammer, overbought. Now, let me tell you what can happen if you want to trade momentum. Momentum does well. You could say, I want to be a momentum trader, which means I'm only going to buy when the MACD is broken to the upside. The problem with that is, now and again, you'll get these massive rises. They won't make up for the number of times that actually the price won't do that. Okay, in my experience. PayPal, it's an 8. It seems to have broken out at long last, but it's sort of trudging along. Don't expect great things at the moment. Axon, overbought, so not for me. Molina, 7, but I'd wait for that moving average. Sorry, the MACD to cross above its moving average, so not yet. And it's a pretty volatile company. Most of you, it'll be too volatile for you. Kenvue, not enough data. Centene has shot back up. Now, if you originally had Centene and saw these 20% drops and weren't happy, well, you've got a reprieve, so get the hell out, because you weren't happy to begin with. What makes you think you'll be happy going forward? If you didn't like that kind of volatility that it produces, then you shouldn't have been in it, and it should start going in that direction. Okay, so you should only ever get into stocks you're happy with. 7, 8, or 9, so that's fine. Would I get into it now? Well, no, because most people I know don't like that kind of 20% drop volatility. Okay, so it's not for most people. Costco, overbought, good company, keep an eye on it, but right now, bit overbought, not for me. Apple, one of my quality 5. You'll know my views on Apple because I gave it on the private Telegram channel. Okay, Amazon, none of this is investment advice. I'm not telling you to copy me. Okay, make that clear. Amazon, happy with it at the moment. Same with Microsoft, even though it's overbought. Meta, as you know, exited in April because I had big gains from last January and I was just too much in a few stocks. Bank of America, not one I own, but because it's a market update, I'm telling you. And it's going in the right direction, I guess. Netflix, well, I already said to exit when it originally fell because it was overbought, but it just seems to be going higher and higher. I think it's just made an all-time high. So there you go. And it's an 8. Would I do it as a special situation? Now I'm just worried about that overbought position, I'm afraid. Just a bit worried about that. Next set of earnings and boom. Walmart, it's an 8, but it's overbought. And you might say, well, you've been saying that for ages, Alpesh, and you made us miss what is an amazing company. It is an amazing company. And again, it's one of those MACDs which when it breaks above it, it sort of shot up. And a few of them have done this, which means it's a pure momentum play. Even though it's got a value growth 7, 8, or 9, and I'm just too scared to buy it when it's that high, I'm afraid. So if you want to buy it, it's entirely up to you. I know seasonality-wise it does well, but sorry, I'm too scared. Berkshire Hathaway, all-time high, overbought as well, so not for me, because I fear, having seen these overbought scenarios before, that can happen. So not for me, but some of you might want it. Again, Eli Lilly, overbought. In future, it will come at some point down here and I will again buy it and get those great gains. But at the moment when it's this high, it could keep going up and up. It really could. Okay, but I just don't want to take that kind of risk. If you want to, it's entirely up to you. Walt Disney fell off. It's wait and see. CVS, patiently wait until 12 months are up. Block, you're waiting. Charles Rivet, you're waiting. Okay. Columbus McKinnon, you're waiting. Whilst that's fallen off there, it's not fallen from an overbought position, so you don't have to exit it on the fact the MACD is falling. You might just exit it on, well, 27% drops are common for it, so a 27% drop here is not a reason alone to exit. Probably want to exit if it drops below 28 support on the basis you want to keep holding it, unless you don't mind having a 23 support. My God, you might even say, I'll have a 20 support. Molina coming back and you're just waiting. Akamai pulling back and you're just waiting for it to come through. One of the interesting things with some of these can be when they drop like this and then pull up, they can sometimes kiss the moving average and then fall back again. Okay, as it did here. Notice how it came up and then pull back again. So came up, pull back again. So just be wary that this could very well, again, go back here. So if you got in early and didn't like the volatility, you might want to use this reprieve as an exit. If you're not in it, you wouldn't buy it because it's 7, 8, or it's not 7, 8, or 9. Okay. Don't forget you can follow me on LinkedIn. I put some really good columns up there recently, and my campaign for 1 million to teach 1 million people how to be better investors. Don't forget to like and follow and have a look at that campaignfor1million.com. Got a lot of free content on there and on my LinkedIn. I've posted some very important lessons for pensions and some of the poor performing pensions and some of the good performing ones and so on. Thank you.